Record.
So yeah, back to it. Multiple time frame analysis is MTFA. It's a technical analysis that requires you paying attention to every time frame. And if we've noticed, whenever I've taught, whenever I've explained, whenever I've shared my chart, I always do a form of drop down analysis, which is analyzing markets from the higher time frame down to the smaller time frame. That is MTF, which is multiple time frame analysis. Is you first of all looking at the overview side of the market, time frame by time frame. So it depends on your kind of trading. If you want to swing trade the market for weeks, you want to hold on to a market for weeks, what you should be looking for, what your MTFA should do, which is multiple time frame analysis, should be starting from the weekly time frame, then daily time frame, then your 4 hours or your 2 hours will now give you entry. Daily time frame will confirm trend and structure for you, because why? You are swing trading, meaning there is a likelihood of you've come to a conclusion that you will develop. You can be a day like swing trader that holds trade for days, fine, but let's assume you've concluded that, oh, this Ethereum I dey look, I want to hold down for weeks, I want trade Ethereum till Ethereum reach 10,000, for example. You are very optimistic, you've seen the chart. What you should be looking for is you start analyzing from weekly. Your technical analysis should start from weekly. You see your daily. Then, if you now say, okay, where should I enter? Where should I start this journey from? You will now be looking at your 4 hours and 2 hours. Then if it's okay, I want to swing trade for days, I want to hold this trade for days, this pattern I am assuming, or probably you've seen a fundamental pattern, which is a news, you've heard the news, there is a trend going on, there is something going on, or probably Donald Trump don't talk something and all those things. You then say, okay, whenever, okay, it will now occur to you that, oh, there is a fundamental pattern that whenever Donald Trump announce certain things for weeks or for the next 6 7 days, there is a constant bullish movement in so assets. So you now say, okay, instead of even saying days, let me look at 4 5 days, let me hold these assets 4 5 days and see if I can, reap from it and all that. What you should be looking for is also your weekly time frame, daily time frame, 4 hours time frame. Then your entry would now probably be around settling within 1 hour time frame. Now, as a day trader, someone that does not like to hold trade overnight should be looking at your daily time frame to know the daily pattern and structure the market is giving you. Your focus will now be 4 hours time frame, which is your mid time frame. Your mid time frame is usually where you get structure from. And person like me, because I like to be safe, I mostly used to get two mid time frame. For example, if I'm day trading, I don't want to hold the trade overnight. My mid time frame is 2 hours and 1 hour. My higher time frame is 4 hours and daily time frame. Then my entry, strict minutes, or probably 5 minutes if the volatility is high. Now, the reason I am saying this is if you are doing if MTFA requires you dividing time frame in regards to your kind of trading or the pattern of trading or the approach you want to use to trade that specific asset. Like I said, I can be a swing trader today, I can be a day trader tomorrow. If you choose to strictly be a day trader, that's on you. But now the point is, the reason I am explaining it like this is if you try to probably want to read from some of these traders, their notes or YouTube video, they will tell you, oh, MTFA is you analyzing markets, selecting time frame based on your kind of trading. Do not be a swing trader, do not be a day trader. Be flexible. Do all that works for you. Rinse and repeat. If day trading works for you for the next 3 days, rinse and repeat till the pattern change. If swing trading, holding trade for the next 2 to 3 days or 4 days is what keeps you at peace and it's been working, stick to that pattern for a while, and that is just it. So I would define multiple time frame analysis as a pattern at which you use in approaching an asset. So how do we do this? Let me share my screen. But generally, MTFA, MTFA has mostly just three time frame. A swing trader has their not both traders have their higher time frame, mid time frame, and low time frame. The higher time frame is where you get an overview of the market from. Mid time frame is where you get structures, trend of the market, where you get your analysis strictly on. Then the smaller time frame, which is the low time frame, is where you get your entry, level of precision, where you want to take decision in the market, your entry, take profit, and all that. That's where you get it from. Stop loss, where you want to risk management, that is where you get them from. And that goes for both day traders, swing traders, and all that. So it depends on your pattern of trading that will not determine the time frame you use. Like I said before, a swing trader would want to, someone that wants to hold trade for weeks would want to be doing a drop down. There's what we call drop down analysis. Drop down analysis in multiple time frame analysis is you starting your analysis from the higher time frame. It's more safer because if you start analyzing from 15-minute time frame, let me tell you what trading psychology will do to you. If you start analyzing markets from smaller time frame, anytime, even if you want to analyze market sharp as fast as possible, if you want to analyze market very fast, very quick, sharp, please start from 4 hours. If you don't want to go too fast, start from 4 hours, especially if it's scalping. Even if it is scalping, start from 4 hours. Some people make this mistake, open charts, they want to scalp and they start looking 15 minutes, 5 minutes. No, sir, no, don't do that to your money. It's not good. If you try it once or twice, it works. I kid you not, it's luck or gambling. You are just playing based on luck and all those things, and that is it. So drop down analysis is a strategy you should stick to as a trader. I don't care whatever trading strategy you want to use, whatever market you want to trade, please, in any financial asset, do a drop down analysis. Start from the higher time frame, understand the market from a broader perspective. It will let it's just like some if you drop somebody, if it's just like if you put somebody in a city, the person that is on the road level of the city will not know what is happening 2 streets ahead. But somebody who is viewing from a drone from the sky, he has most chances or access to view what is happening in that entire surrounding. That is how drop down analysis is. If you stick to 15 minutes, 5 minutes, and you have been looking at the market for the past 3 hours, you might not even understand what is going on. But let me just spend just 20 minutes, do a drop down analysis from daily time frame and meet you in that 15 minutes. I will be able to define the market in a better perspective than you will. That is what drop down analysis is. And let me share my screen. So basically, we've been doing a lot. So everybody know a lot of things at this point. So we'll just go straight to practical. And like I said, I personally, I do my, I do this thing. If I'm not scalping, if I'm not day trading, I want to understand the market better. I use 2 time frame. My higher time frame is mostly weekly or daily, but most times I don't go weekly. My mid time frame is 4 hours, 2 hours, You can even see them on my chart, 4 hours, 2 hours. Then my lower time frame, sometimes I use 4 hours and 1 hour as my mid time frame, especially if it's crypto. Then my lower time frame is 15 minutes, 5 minutes if market is highly volatile. Most times I check 30 minutes, but I don't really pay attention to it. So you can even see this just my time frame that I highlighted here. So we'll go strictly to the practical of drop down analysis. So we'll use Bitcoin for example. I would wipe my Bitcoin chart right now so it can just stay clean. And these people, they liquidate me. Uh, Took an entry here. That was when the fat red candle started. Okay. So this is what multi-time frame analysis is. The reason why such is a terminology, such is something to learn from, is people learn before I will go to it, is so because some people, some students will think, oh, the multi-time frame analysis is not really so everybody that is analyzing market knows you should check other time frame. Now, no, what multi-time frame analysis will do for you, keep this in your brain. Maybe it will guide you in the days when you are going against trading psychology. What multi-time frame analysis will do for you is it will remind you that there is a pattern to which you can approach this market to understand it better. Secondly, it will tell you that there is what we call an overview or oversight of this market, and you only get that at some specific time frame. And multi-time frame analysis will now make you understand also, depending on different assets, that each time frame has what they translate to you, depending on the asset. For example, most crypto assets, not most, especially in top crypto assets, we're talking about Bitcoin, Ethereum, Solana, BNB, which is Binance Coin, and all that. Higher time frame analysis, such as 4 hours, they paint daily view for you, not for 4 hours view. They paint daily view for you. They can easily give you an example of an overview of what happened during the day. Let me give you an example of it here. Look at this now. See the date, 25th of July. Today is 28th. So this is what happened during the weekend. Oh, sorry. Yeah, 25th of July, Friday is 25th of July. This is what happened during the weekend. So 4 hours now has just compressed 3 good days and told you that for the past 3 days, the market did what? Advance from this price to this price. This is another advantage of multi-time frame analysis. But someone who is strictly on lower time frame will not understand what played here already. But you who is on an higher time frame, you've understood this thing. It will give you so many understanding because this alone has given you a painted structure to look at. So let's do a drop-down analysis from daily time frame. Look at daily time frame now. I'll go my normal traditional style. Just mark out my key levels. Stay on that. This is our new resistance for now. Now, from our daily time frame, we'll understand that market is just choppy around this area. Market is what? It's choppy around this area. There is no trend here. This is advantage of multi-time frame analysis. because on 15 minutes you will see different trend, different this, you will not understand what is going on. But this is telling you now that there is no trend here currently and all those things. So anything can happen. But let's come to 4 hours now. 4 hours will not tell you that, oh, market is sideways around here. On daily time frame, it was showing that it was choppy. But now 4 hours is telling you that, oh, market is what? And again, something just came into my mind. You know, when I was talking about choppy markets, I said I don't trade choppy markets. Now, mind you, if market is choppy on big time frame, like daily, weekly, it means it is consolidating on lower time frame. There are major moves that you can make money from. So that's not the kind of choppy market you would want to avoid. The choppy market that you want to avoid are choppy market that are occurring 4 hours, which is rare, but mostly 1 hours, 30 minutes, and 15 market. Those are the choppy markets you would want to avoid because that's already occurring in lower time frame. So even if you break the time frame lower, there is nothing you want to do except from gambling. But from if market is choppy on a daily, meaning one full candle that push the market up is an entire trend, an entire uptrend on 1 hour and 15-minute time frame, even sometimes on 4 hours, because this now is one candle, another candle, and we considered it on daily that such is choppy. But someone could have write this to this. Imagine taking trade from 115K to 119K. That is a profitable trade. So let's not conflict the learning. When I say choppy market is never a market you should trade from, it does not apply to when you see a choppy structure on weekly or daily time frame. So back to it, we are on 4 hours time frame now. I see, okay, market is sideways. I want to mark my key levels from this sideways. So I will go my horizontal. And yes, just in case you have in mind why my charts are so colorful, different line and other things, is how I understood it. And it's also because of multi-time frame analysis. There are colors that I don't use on, like, I use on smaller time frame. There are colors I use on higher time frame. So whenever I open my chart and I don't want to do a drop down analysis again, probably I did a drop down analysis in the morning and I open my chart in the evening, there's no need of me going back to daily time frame to go and look at the market. So while I'm on my 15-minute, 1 hour time frame, however market is moving, any structure, anything I have drawn on my chart, the color will tell me where I got that insight from. So it automatically helps me determine if I am paying respect to that thing, meaning if I am using it or not. Let me put it that way. For example, I marked this resistance now from daily time frame. Even if it is 3 days later, I open my chart, I'm on 15 minutes. I see market at this resistance. I know it's a daily resistance. Market will at least would definitely push down a little bit before it breaks, except there is a strong volatility. I've already understood the market. So yes, defining my colors, actually there are meanings to it, and I've been doing the same thing for like 4 5 years now, and it has always been my thing. Just in case you are confused why you are seeing green, yellow, red, all those things, that's why. So we're on 4 hours, and 4 hours is sideways. So to me, practically, I would want to wait for either support or resistance to trade this market. And we can see that the market advanced almost to this resistance, which it was at this resistance level, then started selling down. So this is a sideways market here right now. So we'll come to 2 hours. Now, the MTFA we are doing now, we've looked at daily time frame, we've looked at 4 hour time frame. These two These two now, because I'm not planning to hold this trade for weeks. If I eventually want to pick trade from here, I will consider this 4 hours and a daily time frame as my higher time frame. Then I will consider 2 hours and 1 hour as my mid time frame, or 1 hour and 30 minutes as my mid time frame. Then if I'm looking for entry, I will go for 15 minutes. So now we've gotten a structure from this market. We've gotten a pattern that the market is in a bullish movement, which is an uptrend. Then the structure we have gotten is that the current structure is a consolidation after an uptrend. So what are we looking at here? We are looking for either a buy or sell because it is sideways. It is not trending. It's not facing one specific pattern. So we're on 2 hours, and 2 hours tells us that market is sideways. Then we'll come to 1 hour. What are we going to do here on 1 hour? Still the same thing, sideways. And you can see the more we are opening the charts, the more it seems like the resistance and support that we are marking from higher time frame, they are now far from each other. That is another thing of multi-time frame analysis. You see that higher time frame give you a very, very wide perspective, an easy perspective of the market. I know. So what are we looking at here? Simply to look for an entry. Yeah. So if I am to take if I am to analyze this market now, I would just simply say, okay, let's look for a buy or sell. I mean, if market get to any resistance area or a supply area, we'll be looking for sell. If market gets to any demand or support zone, we'll be looking for buy. And mind you, some a question might come that, oh, is the only support and resistance that you are using to look for trade? No, there are other things that I could use. But the reason why I will not use other things is because market is sideways. Whenever market is consolidating, the easiest way not to confuse yourself, like I said this before, that I'm a kind of trader that I don't like to overcloud my analysis, bringing this, bringing that, bringing this. By the time you are doing all that, you are confusing yourself because you are combining, you've probably combined 4 to 5 strategy, and most will contradict each other. So back to this again. Why am I using only support and resistance to determine this area now? But I could use another thing, which is how will I say, trading with, I don't know how to, I've forgotten it, but there is one thing I call trading with what I see in the market here. Now that I'm looking for support, I mean, that I'm looking for buy and sell in this current chart. We'll analyze another chart, don't worry. Now that I'm looking for buy and sell in this current chart, another reason I can still take trade is if I see in after this down on lower time frame now, this is a downtrend on lower time frame. This is a downtrend. But right here, if I see any new trend forming upward, I will take a buy to trade it towards this resistance. That means I am trading what the market is displaying for me. But why am I trading what the market is displaying for me? You will ask, is that not the same thing as gambling and all those things? No, I've already done a drop down analysis. I've understood that market is consolidating sideways, meaning the market is trading within a box. Within a box, and inside the box, I have marked my resistance, I have marked my support. Those are the areas I need to guide my trade, whatever decision I am taking within that box. That's how easy I take my decisions with sideways markets. Sideways market is just market is trading within a box. Let me give you from 1 hour time frame again, or let me put it on 2 hours time frame. Within a box, this is it. this is this horizontal line, this is the horizontal line. Market has been within here. You see, in this middle part, safe was not touching the resistance, it was not coming towards the support and all those things. Market is trading within a box. So the advantage of multi-time frame analysis is you've gotten this insight. So when you go on smaller time frame, you can easily follow the trend on smaller time frame and trade as a day trader or a scalper. That's it. That is just it. You can easily know that, okay, this is a bearish engulfing. Sellers have took over the market. Market is forming a new sell trend on 15-minute time frame. Let me sell the market towards the support. As you are selling towards support, market is changing. You close, you take profit. You see another form of buy trend. Is exactly okay. Let me give you this. Let me give you a previous scenario it happened. Imagine someone that saw a sell trend on 15-minute time frame at this level, it's a sell trend. The person sold to this area to profit, then waited to start buying here. Oh, there is a buy trend here, bought here, and all those things. That person is already trading, that person is active in the market. But where did you get this insight from? Is from the higher time frame. So um let's look at gold, for example. Let me open gold. Before I continue, is there any question? If you have any question, please unmute and ask. Oh, yeah. Okay, so we'll continue. Oh. All right. Let's look at gold charts. It's been months I open gold though.
Hmm. Gold been down.
It's been months. Why I even close it? It didn't do me one kind thing. I just no. I say no. I just leave and say your season has come to an end.
Gold Naomi.
That's one thing I like about so far in my trading psychology. I've been able to develop a flexible pattern that I notice when I should leave a specific market alone first. You go do your own first. Let me put my focus somewhere else. And it has always been chill for me over the years doing that, because before I was so closed-minded on just trading only crypto and all those things. There were times that I would analyze forex market. I would see clear chance to make money. I would not take advantage of it because I just want to be on crypto market. But it's no longer like that for me. I am now very flexible with the market. I'm waiting for this Ethereum because sorry, I will analyze that. Let me just check this. I don't analyze Ethereum just I Okay, let's look at the gold. Now let me get this off. So if we're doing a drop down analysis on gold, we can say let's look at our daily time frame. All I need is hmm, this is okay. This is a resistance level. This is a support level currently. So on daily time frame, is there a structure here? Please, somebody should answer me. Oh. Is there a structure here? You people have looked chart pattern. And me, I might not know the name, but I would know what the structure is and the meaning. That's it for me. Please
Ah,
let's unmute and respond so that we can learn. Let's not just sit and watch because I've used Bitcoin as an example just now. So now that we are going over a new market, let's do it together. We are doing a drop down analysis on gold right now. We've marked a support and resistance. Inside the support and resistance, is there a structure? That's just how multi-time frame analysis is. As you are marking your key levels, you are looking for structures, is guiding you down to the smaller time frame.
mm, think it might be a bearish wedge. I don't know. Uh,
Let me put a trend line.
yeah, I think it might be a flag. Can you use the line chart?
Let me put a trend line so you can see.
Mm,
Mhm. This is why I don't
ascending
draw.
trend.
This is why I don't draw trend line. Is I already see the invisible trend line. It was the same thing I did with Ethereum just now. While I was just doing checking this, I was just doing what I was doing. So this is why you need to master multi-time frame analysis. It will help you even the days when you just need to flip through markets to get a quick insight. You will easily do it because you know how to spot structures across different time frames, these easy things. So you have to master this multi-time frame analysis. And the best form of multi-time frame analysis is actually the drop-down analysis. Okay. Now, in most cases, yeah, this looks like a bearish pattern. Mm. Like I said, forgive me, I don't know chart patterns, their names, but I know the structure and I know what it means. Because maybe my brain cannot carry everything. So you forgive me if I'm not calling the name on your own time. Go and study the name if you want to find the name. But this is a bearish structure, yeah. And what we can see here is like a wedge market squeezing, but the support remains, the resistance, sorry, remains within the same zone, but support are, how will I say, the market is forming higher lows, but no higher highs. So it's a wedge. So if we now come on 4 hours time frame, what do we see on 4 hours time frame? Let me squeeze this chart a little bit. Let me squeeze this chart a little bit. Now, on markets like gold, I don't even advise you to be a swing trader. I use God, I beg you. So we will just focus more on the lower time frame, but let's look at what is happening on the higher time frame. Now, on these 4 hours, what we can simply see here is still the structures from the higher time frame. But what if I delete the trend line? What do we see? Please unmute and respond. Let's do this together. I've removed the structure from the higher time frame. What are we seeing here?
Sir, can you repeat again?
I say I have removed the trend line from the daily time frame. Now we are on 4 hours. What are we seeing on 4 hours currently?
Is it based on the market structure or how?
Yes, it's the market structure we are looking at. The most important thing for you, the most important thing for you in technical analysis is key levels and market structure. That's the most important thing. Any strategy you are using, any form of any indicator you are doing, you need those two things, key levels and market structure. And that is what we are looking for. And that is price action. I'm a price action trader. The two most important thing I look for is key levels and market structure. That's what determines anything else in the market. So we are on 4 hours right now. We are on 4 hours right now. So now this is a support, this is a support, this is a support, and this is the previous resistance here. So let me mark my key levels for you so you can see. Now this is the previous support that seems like the market has broken. There is another support here, and there is one more here. So now our focus is now based on what is happening in this recent region. So we'll come to 2 hours, and this is just simple multi-time frame analysis. On 2 hours, what can we see? What is the current market structure? That is, I just need somebody to answer that question. What is the current market structure? Are we following this class?
Yes, sir.
Yes.
Okay, now I thought. Yes, sir.
It's a it's a downtrend, sir. The recent one, at least from this when that should be 22, 23rd from that market, then till today, 28th. That looks to me like a downtrend.
So you said what?
Oh, okay. Can you hear me now, sir?
Yeah, I can hear you.
Okay, I said to me, it looks like currently it's on a downtrend.
It's not, it look like you speak with confidence.
Okay, it's a downtrend, sir.
Oh, you son of David, which one be currently look like? So what we are saying here, our current structure is a downtrend from this resistance zone. Is a downtrend. Now, keep two things in mind. Yeah, two things in mind is this is a support. This is another support. This is another support. Meaning, first, there are three supports here. There are three supports here. And from the higher time frame, from the daily time frame, this is where much time frame analysis is good. From the daily time frame, we saw that market has been declining non-stop. There is a full sweep on liquidity on the lower time frame in all this region. Market has been declining non-stop. And now market is close to a consistent support level. So what is that telling us right now? I need somebody to answer because I will not answer this. If on a daily time frame, market is close to a support, like the trend line we drew just now, market is at the trend line. Then again, on a smaller time frame, market is close to support. Again, now we are on 2 hours, and we see that there are support here. What are we anticipating? And we can see this is like a mini support. This again, because this is an uptrend that the market carried here. And market breaking here is a change of structure to form a downtrend. So meaning there's a total liquidity sweep with every form of trade, every form of buy trade that has been placed using this support zone. And now here again. So what are we looking towards?
More liquidity since the other supports are closed.
He said, sir.
I said more liquidity since the other supports are also closed, and based on the current trend.
Okay, good. Market is on a downtrend. And based on the current trend that we've been seeing and all that, what you said exactly is correct, but your explanation is not aligning. Now, this is one tricky thing about gold is gold sometimes brings the idea that it wants to form a new trend. And people enter because people think they can ride gold entirely. No. So this is where gold liquidates people very, very swiftly. If gold does break here and form a new trend, we can buy. But till then, we stick to this because one thing people like to do is they have this sentiment of thinking they know when gold wants to end a trend, a move. You can't. I am sorry. You can't. You cannot know when gold wants to end a trend. That is one thing. It's when you probably think it's the volatility is getting low, wants to end. That's when one fat candle can just come and sweep through 4-5 supports, and that's what we call liquidity sweep. Gold knows how to do liquidity sweep better. So the simple thing here is from our drop down analysis from daily time frame. This is what we saw. Let's come back to daily time frame again. This is a trend. This is a trend. Yeah. Let me draw the trend correctly. Yeah. Okay, this is a trend. Now, if we come to 4 hours, 4 hours was to be able to capture that trend. But now we are anticipating what? Liquidity. So what I would do here with this trade is a simple set to look for where to sell from. That is the simple thing I will do with this trade, is to look for where to sell from. Now, how do I look for where to sell from? Please, somebody should answer. This is what we are paying attention to. We are on 1 hour time frame now. Let me even put it back on the 1 hour. We are on 1 hour time frame. But mind you, this is one thing I explained earlier. that if you are doing analysis, if you are doing analysis well, if you're analyzing markets well, you will always end up with two perspectives in the market. What will make you go for one is sentimental analysis. But bear it in mind that what makes you a good trader is knowing that there is another scenario that could play out in the market. And if you are flexible enough, you can be able to still follow that scenario in case it doesn't go your predicted way, because you can never be 100% sure that this is what market wants to do and market will do it. It has never been written anywhere like that. So what multi-time frame analysis and drop-down analysis will do for you is to be able to give you that two different perspective that could play out. That is it. So, for example, this multi-time frame analysis has let us know that markets has more support to sweep here, and there are good support, and then there is a trend line that market has been following from the daily time frame. So meaning there is a chance that the downtrend might possibly end around this zone, or market can decide to sweep through all this area. But since this is a downtrend, we are going with a sell market. But if market breaks here or comes to this moving average, then we should be looking for where to buy and follow the new uptrend. That's the two things involved. So this is our advantage of multi-time frame analysis. I don't know if the class is clear enough, but if it's not, you have to rewatch the video, because multi-time frame analysis can be very, very confusing, but it will take time for, in as much as it seems like it is very simple, no, it is not. It will confuse you, because sometimes one time frame is saying this, another time frame is saying a different entire thing. And it does happen a lot of times in the market. And it does happen. So, is there any questions, sirs?
So, sir, this market is still going on a downtrend.
Yeah. Still going on a downtrend. It's still going on a downtrend.
These charts are looking scary.
Gold can be like that, even as it is right now. On this, if I am someone that trade gold, I won't even take any trade currently, because the market has clarity, but there is no proper entry level for a technical analyst here. Anybody that is entering this gold trade is probably risking money just based on what they see, they think they can make from it. Because as a technical analyst, I don't think there is a nice entry for this trade, and gold can be like that most of the time. Now, why that's in this scary? So yeah, I think Ethereum is ready to do what I have been waiting for. Let me take one more risk. Is there any question? If there's no question, that'll be all for today. That will be all for today. If Pastor wants to add anything, we'll be looking forward to that.
Okay. Thank you, Mr. Destiny. All right, do we have questions? Questions? Multiple time frame analysis. No questions. Well, I really want to, are we really following the class? Do you think you're gaining value or not? Do you think you're gaining value? But are you raising your hands?
Yes, sir. So
Okay.
the class is something. For me, I have questions, but I have to watch the video again first.
Okay, just ask your question here first. Let's hear. What are your questions?
Okay.
Yes, we're waiting to hear your questions.
Oh, it's coming, sir. The question is coming, sir. But me, I have questions.
All right, so waiting. I think the introductory phase of Forex can be boring, a little bit boring, but I think also that there is a gusher you just hit as you are learning that it begins to interest you so much. Like, for example, myself, even the money that, in fact, I was recording how much have been investing on Forex, mentorship, buying prop firm accounts. I just stopped doing that. I got to a point where I think there is just a gush I hit that the interest just escalated, whether I'm losing money or not. I just keep, okay, why am I going? I always go back to why did I want to, learn this? So I keep going in the thing gets interesting the more, it gets interesting the more, it gets interesting the more. So I think if you stay true, personally doing what you're supposed to do by yourself, self-learning, self-development, it will really help you to you get to a point where it's as though you cannot go back anymore. You just have to be interested in learning it. So it might look so difficult or confusing at the initial phase, but you just keep learning. There is just the first time Forex opened up to me was when Mr. Destiny taught me some things. I just saw it with another light. Like It was just as though I've never learned that before. So it opened up a new perspective, and I was interested and I pursued it more. So you might have questions, but just try to watch the videos over again. Stay with the chat. Sometimes earlier, I just sit with the chat. I don't even know what to do. I'll just be looking at the chat. 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 Because so you just sit before it. Okay, what should I do now? What is this? What are all these things? But I believe, Abel, as you go on, just try to give it time every day. Just try that time every day. It builds a kind of chain link and it just connects you to the chat. These days, I just like seeing the chat on, whether I'm doing anything. My laptop TV is always on with a chat on. I just want to be looking at it. It just interests me. So I think over time, but just make sure you are putting in your own quota of hard work on a daily basis. So I think at this stage now, if you can be given 30 minutes every day to just check one or two videos, learn what we have taught before, I think it will really help. It will really help. Because there's this study, you must sit down and study before it opens up. It just clicks. So this is what Mr. Disney was teaching. You just understand it. So please, I'm encouraging us to just try. Even me, myself, and I believe Mr. Destiny too, we're all still putting the hours to learn more, to build that discipline and become better traders. So if you have questions, be free to ask. Whether you think the question does not make sense, ask it. Whether you think it's just sometimes you will just think that it's just me thinking randomly, and that idea might just make sense. I never knew what hedging was, but when I learned Forex, I was thinking that, okay, what if you put a trade here, put it here? So I didn't know that it was even a concept. I just thought about it. How can we do this to trap this market? Well, some ideas can just be something like I'm trying to say, don't trivialize a little idea that might come to you. Be a concept you can build on, and it can just be what will make you understand the market. Well, so if we don't have a question, I think we can call it a day for today.
And lastly, to encourage everyone here, because to be honest with you, is genuinely what what we are doing in this group is considered to be called gentle parenting. I'm going to be honest with you guys, because my students, I know after I've taught them to a certain point, I don't waste much of my strength. You start analyzing markets, you start dropping reports daily, you start giving feedback, you have your follow-up chats for the whole week, this and this and this. That way, it keeps you glued to the market, keeps you understanding and betting perspective daily about the market. So even when you make mistake, you understand what the market did to you that day. You understand that our market played you that day. You understand that the market deceived you. Why did it deceive you? Support was acting like this, these kinds of things and all that. That is how it is. But I have noticed that everyone in this group is so calm. And I am not saying this because how am I going to put this? I will make you understand here that if you pay someone to teach you trading, even if it's 1 million naira, you pay them for the class, 500,000 naira, you pay them for the class, and you end up being too relaxed and all that, they will see it as unwillingness and they will let you be. And after a certain period of time, you come to them like you are serious. They are not going to teach you, and there's nothing you can really do about it. The reason I am saying this is, in as much as I am trying to encourage everybody, I will also let you guys understand that there are so much way you can do better. There is no need holding back your insight about the market. If you open chart, even if it's Saturday that the market is closed, you understand, you bet a perspective. You can drop the chart, you can drop your bias, a small write-up. If the market end up playing how you did, you come and explain. If it does not save, you will still write it. Who wants to correct you will correct you. If tomorrow morning we wake up, somebody say, this is what I understand about gold. Gold fee pump today. This. If there is a mistake in your understanding, if there is something you did wrong, the other person can just quickly open gold chart. If it's Brahma, if it's Pastor, if it's me, we'll open now and say, okay, we'll say, we might market might liquidate this your support level first, but let's see how it plays out. Those things will give you experience. In trading, if you learn, you start doing trading class 4 hours safe every day from now till next year. You will not still learn as much as you will learn when you start experiencing the market on your own. So all this class we are doing, it will continue being class till you guys start being proactive in this market. So all I am saying is, so far we are doing well, but we can do better. That's all. So I think that will be all for tonight. Let me go and rest. I just came back from work an hour ago before I joined this class.
All right. Thank you so much.
So.
All right. Take care, everyone. Have a good night. I'll stop recording now.
Thank you,
Thank you.
sir.